Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It's March 13th. I'm trying to get ahead of myself there a couple of months. But no, it's Thursday, March 13th, and this will be our chart lesson for today. It's Thursday, so this wraps up our week for chart lessons. No chart lessons on Fridays. We'll be back to do our next one on Monday. Just looking at the daily chart, you can see another down day. We closed slightly off the lows, but we closed lower yet again, and we pushed much lower again. So it's just a very bearish day again. It was mostly all downhill with a slight correction at the end of the day. We had some sideways choppiness along the way, but most of it was all downhill today. So there it is on the daily chart. Let's flip over to the 2,000 tick chart and we'll take a look, and we'll go through the trades and we'll wrap this day up. Okay, here it is. It looked like we were going to, like usual, we start out kind of sideways before it sells off and breaks lower and sells off. And then we kind of went sideways here and got a break of this down channel. And then we had a couple of more measured legs down. Notice that we actually had a new low here, but it wasn't much of one. And so they attempted to test the low again. You can see how rapid that thing moved down. Let me zoom in here a little bit. I mean, it just went straight down. And then we had a two-legged correction. A lot of times that's the center of the pattern. We'd start with this first to see if it's the center, if that's the first leg, and we get another one like it. And you can see we got almost another perfect leg down. That's about, we went a little further, but that's because the market's kind of overdone and the selling's really strong. But it found the bottom at a measured move there and reversed. Took some of it back. That played out. Trended all the way back down, and I think it didn't quite test that again, but it's close. But notice we got a break here and a couple of legs down, and then we rallied some into the close, not much, and we're rallying a little more since the market opened back up at 5. I'm getting this done a little late today, unfortunately. But there it is. There's the big picture, and there's a bigger two-tiered channel here, but it doesn't really help you. Prices never came back to this upper trend line. It might have helped you with the midline, but I think you're better off if you just drew these shorter term patterns here and try to trade them. It's definitely mostly downhill today, along with some choppy mixed stuff in between. So let's zoom in here. 7 o'clock came. I believe it was right in here on one of these bars. Yeah, 6:59 there. So 7 o'clock came as we're working higher here. And notice that new low, and you get a first entry and a second entry. If that would have been fully green, you could have traded that on the engulfing bar and cut the risk down on that some. But either way, it's still a very bearish bar, and there's still plenty of room to get out. Even before here, there's room to get out. Now, granted, that's a 30 tick bar, but you know, if you want to trade in this environment, sometimes it's what you have to do. It's a great second entry, and it was a quick, easy trade, and that took us into the news. And you can see we had unemployment and PPI this morning, so you had to sit that out. And you can see we had a big jump on that, but it didn't take but a minute to take it back, and then we were just chopped sideways after that. The market just doesn't know. I guess it just doesn't know which direction it wants to go, other than down. It continues to go down, but we're just chopping sideways here. And you get a triple test here, but you're still in that channel. I don't think that bar is quite good enough. So just wait. A few minutes later, you get another test of it with a nice bar. Go long there. Comes back, it tests it again. If this hadn't closed inside, I'd say make this green and wait on a higher low. But it closes back inside. It's not right on its high, but we bounced there multiple times, and we're still way away from the EMA. I think you have to take that trade. And you can see it's a quick, easy scalp, nothing much more than that. And then we get stuck kind of in a tighter range here. And you get a little failed breakout, but no signal bar there either. And then we break loose here, and we kind of chop sideways before we go lower. And I just don't see any trades down through here that I like. I think you have to sit tight and wait. There was Notice you going up, you get a first entry, and then we didn't quite make a new low, so there's a second entry there, but that signal bars, you can't trade that. And there's actually a first entry when it breaks above that, a second entry long, and that is tempting. That signal bar is probably okay as a signal bar, and you might say we tried to go lower twice, but to take that, you really want to be on the other side of the EMA. It turns out to be a great move, but you just don't know that in advance. And we run up, and then we start chopping sideways, and notice you get a 1, 2, 3 triple test. This bar is almost too big, but there's enough room in there. I can't remember. I want to say it's close to 2 points. Yeah, it's almost 2 points. So I think you can take that trade, especially with it being at the trend line. Of course, you get a close outside, but it's probably going to run to a new high here. And this thing just takes off. That one was tempting to go short, and you might take that one. You always got to be careful trying to pick tops. And you see this one, it still closes on the outside too. But if it breaks lower than that, I mean, you've already got your break and a couple of swings up. You're playing range rules here, really, and not the trend. And there appears to be plenty of room. So, because you're kind of counter trend trading, we'll make it green. But you may take that trade. And then here's another one. You make a double top, and this breaks higher and turns down, and that's mostly bullish, way away from the EMA. So that's another one that you might take. And you see we get another close outside, and then we go higher yet again. And now you've really shot up here and gotten real far away from the EMA and got another big bearish bar. So you've had your break, and now you've clearly had more than a couple of swings up. So once again, maybe you take that. You're better off to wait on the lower high, and by the time it comes, it's way down here, and that's too far. So you really can't take that trade. I think this is really a little more over this way. And you can see this channel working down. You get a close outside, and then you got this working up. Again, you get a close outside new high, but no signal bar, no lower high or anything, so it just kind of goes without you. And then we get in this range. And I draw this trend line down through here as well. It got confirmed right here, but there's no setup. Notice there's clearly a second entry short, and it does turn down right off that trend line and confirm it, but the signal bar is no good. And you couldn't really trade anything down through here. I don't see anything I really like. I would have liked that one if you had a good signal bar, but there's no signal bar there. Then you fell out the bottom, but again, no setup. And this was tempting here. I talked about this. I started looking for a trade right in here somewhere, and I took another live trade today that I recorded. And if you haven't seen that yet, unless you go to the website, you won't see the link to it on YouTube yet. But I'll make that live on YouTube after I upload this, so it'll be up shortly after this. But you may have taken that trade. If that was a little more bearish and maybe even closed below that bar, I probably would have taken that trade. I wanted to take it, but it's not a sure thing. It is right off that trend line, but you're just really trading this as a range here, and it's a little failed break higher. So the problem is that's just so congested, and there's a good chance it could break lower and bounce and stop you out and then go lower. So I'm just not crazy about it. I marked it green, but you'll watch me in real time. I skip it. And then we drop down here, and what do? We start chopping sideways again. And notice we make a 1, 2, 3 triple test there. Again, you've got a range. This does close back inside the range. If it would have closed outside, I probably wouldn't have taken this trade, but when it closes inside, I like it. If it breaks above that, we're probably going back to the highs of the channel. At the very least, we're probably going to test these highs across here, and so that you get plenty of room to get out before you even get to the midline. So even if it turned out the midline, you're still going to get a scalp there. So I like that trade. This was the example trade I took, the live one. It was a little longer than the 13-second one the other day. I think this one lasted 1 minute and 8 seconds, and I did not get a runner on this one. They came back and got my break-even runner. And a lot of times on a range that's tight like this, I may not even try to get a runner, but because it did break lower momentarily, and it's a triple test, sometimes those lead to a big move. So I like to, when I'm trading those, I generally will try, and there is enough room to get 4 points off a runner here. And I generally keep mine standard set at 4 and then try to adjust it based on what I think the market's going to do from there. Yeah, I'll either leave it at 4 if I don't think we're going to get much more than that, or if I think there's a chance my target's way up here somewhere, I'll move my target way up there. But I could have just left it where it sits, and it would have gotten 4 points, except it came back and got the break-even stop. So I wasn't willing. I actually traded that break-even +1 because I wasn't confident that we could go higher because we were struggling to go higher. I just figured we'd either get back to the midline, probably get back up here, but I didn't know. So, and there was always the chance because it broke lower and made a new low that it could run all the way back to the trend line or even back to test this high again. So I don't even think I had drawn this two-tiered channel at that point. It's there, but I don't think I had drawn it. So anyway, it turned out to be a nice quick scalp. It was over $750 before commissions, and so I think it was minus 20 minus commissions on 20 contracts. So you could deduct about $80 from that, probably 75 or $80. I think that's right. Yeah, that's probably about right. A little less than $80 because I don't quite pay $4 a round turn. But anyway, it drops down here. We chop sideways, and then it breaks out again. But no, this is your signal bar. No setup. Nice move. Close outside, new low. And even though this is not really, we make a lower low here, but we close much higher. So you've already got your break and a couple of legs, and we closed higher, way away from the EMA, and we're probably off the lower side of this channel if you've drawn it yet. And so I like going long there. It's a little, I made it green because it's a little congested, but the odds are we're probably going back to at least the EMA, probably going back to the midline, and maybe even going back to the trend line. And you see what happens when we went all the way back to the trend line. We turned down off that trend line, then make a lower high. I like going short there just to try to ride it back down to the EMA to minimum, but if the trend starts back up, you're probably going much lower. And guess what? It just keeps going. Then you get a first entry, second entry, but that signal bar is just not good enough. And it's a shame because that's a nice move. And I had a couple of trades like that today where you got a so-so setup that's decent, but you don't get a signal bar setup because that's a second entry short. You're expecting prices to retest the low here. It looks like we might even be in a range, so you're expecting prices to probably come all the way down and test these lows. This is played out going up. You got to close outside a new high. This is not played out, so you're going to at least try to get a new low there. So there's a lot of reasons to consider going short. There's also a 1, 2, 3 triple test there. I mean, lots of reasons to like going short, but we're not quite back to that trend line either, which you definitely should have drawn by now after you turn down there again. But we are in this range, so you may not get back to there. So, but I still think you need a good signal bar, and you just don't get it. And of course, it drops down, and it's bouncing down here at a new low, and you get a 1, 2, 3 triple test. You also get a higher low because that makes a higher low. It closes much, much higher. It doesn't quite close on the high, but I think that closes in the upper 1/3. Honestly, you might even consider trading that on the engulfing bar. That's mostly red. It's not 100%. So when it breaks lower and fails and turns up, if it goes past that, it's probably going to trap some people. So you may take it from there. It just depends. I marked it blue. I think you could take it either way. And of course it runs up. You get a close outside and move to a new high. And there is a second entry short there, but it doesn't break. And I think that signal bar is good enough. If prices would have broke lower there, but they don't. You get an inside bar, and it's kind of a small body doji. Prices still go lower, but they come back. It looks like you're going to get a lower high with a good setup maybe, and again, it doesn't happen. And it just runs down. There is another trend coming down here. I would probably draw this from here, like so. And you get your break, move to a new low, and it bounces there again, but no setup. And then you get a little break, a failed break lower, and this breaks lower and reverses. And look, it closes back inside. Very strong. That looks like rejection off these lows. That's at least a triple, quadruple test, plus a little failed break lower. And like I said, a lot of times this is where you catch a major low. So I like going long there. You had to be quick because it does gap over. But you may not have been able to get in that one. If you couldn't, drop a limit order and see if it comes back and gets you. I don't know if it would have or not, but I like that trade. And then we just kind of work higher, and we go back to the highs of the range. And unfortunately, you don't get a setup up here. It's just a bunch of congested, small body bars chopping sideways. And so, again, you don't get a chance to participate in that nice move down. It's a shame that this couldn't have been a good signal bar and just broke lower, but that's the way it goes. That's why you just have to have discipline and be patient. And you'll hear me talk about that in my trade example today. There were several times I wanted to enter, and but I had to just sit and wait. And I had to wait almost 30 minutes before I got a good setup. And then once I waited on the good setup, it wasn't much of a trade, but I still got my winning trade. So you'll see it if you hadn't seen it already. But you just have to be patient and you have to be disciplined. Obviously, you got to be able to read the chart, and you got to know which way to be looking to enter. You got to know when to switch from range rules to trend rules and back and forth and so forth. I mean, you need to know all that stuff. And I had a gentleman send me an email today. He's been doing this for, I think he said 3 or 4 years. And he told me he didn't understand yet what I meant by a break and retest of a high. Well, if you don't understand that, you don't even understand the very basics of what we're doing. And so what I had to tell him was, as demoralizing and self-defeating as it might feel, you got to start from scratch. Get the manual back out. Read that manual until you understand that, because everything, you got to understand, the market only does 3 things. It trends up, it trends down, or it chops sideways. If it's trending up or down, we're trading trend rules. And if it's chopping sideways, we're trading range rules. That's the basics of what we do. And if you don't understand trend rules, which is probably the easiest trading, trying to find second entries at the key entry point with the trend, that's our bread and butter. And if you don't understand that, then you're just spinning your wheels. You're just throwing darts at a board. And I'm not saying this to pick on him. I'm not going to call any names, but he needs to hear this. He needs to, as demoralizing and as much of a setback as it probably feels like, the gentleman has to start from scratch. So anyway, but this runs down. You get a close outside and a new low here, way away from the EMA. It's a good chance it's going to be a failed break lower. Maybe you take that. Again, you're better off to wait on the higher low, which comes here, but you can't trade that on the engulfing bar. And by the time it gets here, it's right back to the support resistance, and you're right back at the EMA. And you need to be on the other side before you can trade that. You need room on this side back to the EMA, or you need to close above it before you could use that signal bar. And you don't have it either there, because you see what happens. It turns down. It takes it a few tries to get through, and then it takes it a while, and next thing you know, it's going short still yet again. So you got to be careful trying to reverse through that EMA. You want to have room to get out before you get to it if you're trying to pick a reversal, or you want to reverse on the upper side of it before you go long. One of the two. But anyway, it looks like we're going to get a second entry short here. You do get a close outside here. Is that real convincing? Maybe not, but I probably would have taken that short if it would have broke lower, but it doesn't. You end up making another higher bar and then turning down, and so this is your signal bar, and it doesn't qualify, so you can't enter. And you do get a first entry, second entry, but I wouldn't take that. It would have worked, but it's not a very good setup. And you see we're kind of stuck here trying to make this new high, but it finally pushes up and makes it, and you get a second entry short here. Notice that new low, first entry. You technically get another break here, but what this looks like is a leg up with two legs in it, and then a leg down with two legs in it, and then your second leg up equal to these two legs. That's what you got there. So you can treat that like a second entry. Big bearish signal bar. I like going short there. Another nice trade. That's just a first entry, congested first entry, away from the EMA. It's not a very high probability trade. We do get a close outside and a new low. You could consider going long there, but that looks congested. Just sit tight. It does go back to the EMA. And then you get a first entry long, turns back down, and you get a second entry. But again, that looks too congested. I think it would have worked, but I just can't see taking that trade. And you still didn't get a new high. And you can't go short there because that signal bar is not strong enough. And then you run down here, and now you're just chopping sideways. But notice you get a 1, 2, 3. So that's a quadruple test. And so you got strong resistance right there. And a nice bar with plenty of room to get out. It's just another range rule trade. For those of you that can't see it, let me draw it for you. There it is. And you got plenty of room to get out. Just take just one tick below that, and it's another quick, easy move. And you see that trade takes very little heat. Takes a few ticks maybe. The one I took this morning might have taken 1 or 2 ticks of heat before it went and made a scalp. But that's, those are good trades when you don't take much heat. But that thing drops on down, breaks out, fails, and that is tempting. I didn't draw the channel here, but there's a channel working down. And you get a break and a new low. Now you might take that trade, but you're trying to pick a bottom, so you're better off to wait on a higher low, and you don't get one. It's way up here. And then even this one is tempting, but it doesn't make the low. I'd almost take that trade anyway and put my stop 1 tick, because you're only adding 1 tick to this. So it's a consideration, but notice your new high, first entry, and then a second entry long right there. And so if you took that, your stop would have to go down here. And I think it just adds 1 tick. The low of that is 55.12, 55.11.75. So it's just 1 tick. So it's still very low risk because this is only 6 ticks. So if you add the extra tick, that's 7. You could actually get into this trade with the 8 tick rule. So, and look at it go. I mean, you get a runner here easily, and it just keeps going. This is the kind you want. This is what you want to catch at the lows. So again, it's not a perfect setup. It's a second entry, but it's a little bit of an inside bar, but it's only 1 tick difference. So, nothing's ever perfect in trading. I mean, I say that there's perfect trades, and there are some that you can say that's a perfect setup, but they're few and far between. There's always the signal bar is not quite right or this or that, but if it's close is often good enough. So I think that's close enough, especially since it's so low risk. Now, if you were doing that and using 20 ticks, maybe not. So, but anyway, it shoots up, turns down off the upper side. You get your channel working down. You get a close outside. It tries to make a new low, but it confirms the trend line instead. But you can't go long there. It's not a good signal bar, and you see it takes it a minute. And then you get 2 legs back here. Even though this makes a slightly higher high, I do believe, it's still 2 legs back. And you can count this as a new low. So that's a failed second entry short. So it's a reversal pattern continuation, a failed second entry continuation as well. So for that reason, I like it. I still think it's green, but I like the trade. And this thing takes off. We're just chopping higher here. This was another second entry, but This is your signal bar, and that's you can't go a long way up there. You do get a close outside, move to a new high, and then you get a correction. Is that a convincing close outside? Not necessarily. So you'd probably consider this, and it's probably going to retest the high. But you get a close outside here, and it tries to go lower and just keeps going higher. I don't see any chance to get long there, and then there's really no chance to get short up here, and the bottom just drops out of it again. Notice you get a close outside here, and you do get a new low all in one bar. It tries to make another one. You're a long way away from the EMA, and that's a higher low with a decent signal bar. It's another possibility. It's getting late in the day, so you got to be careful now. But it would have worked, and I could see reasons to take that if you were, if you're still trading and you hadn't had a good trade, you hadn't had a chance to trade yet. That's a possibility. So it runs up and then just kind of chopping sideways, and you get multiple tests up here, but no real chance to go short. You do get a lower high here, but no signal bar. This is the first breakout, and that's an inside bar, so you can't really take it. But you could have taken this one if it would have closed on its low, but it doesn't. So you got to take what, you got to sit tight there, even though you want to take it, and it ends up working. But that's the worst thing you can do, is try to go lower or try to enter that trade or force that trade is what I'm trying to say. The worst thing you can do is try to force that trade and get stuck and it bounce one more time. So you need a good signal bar there. And it's just a first entry as well. It is a lower, I think you could consider that a lower high. It's right off the trend line. And it does move down, but you can't look back. That's really the other thing I was trying to say a minute ago, is you can't look back on these trades, because if you do, you'll say, I knew I should have entered there. And then guess what happens the next time you enter one like that? It doesn't do this. So once a trade's gone, it's gone. Don't worry about it. Don't look back. Never look back. Never doubt. If you didn't see it in real time and you didn't take it, you did the right thing. So anyway, that takes us into 230. Nothing else there. So, yep, another down day with a late rally to take some of it back. Not much, but it's tough trading. This was not as easy a trading day as what we have had. But there's trades there. You just have to be patient. And just like as I talk about it in the sample trade, just be patient. Wait till you get a setup. And until then, just sit tight. You might have to sit there for 30 minutes like I did today. You might have to sit there for an hour. You might have to sit there for 3 hours. I've done it before. I have to do it. You have to do it sometimes. Because if you don't and you get antsy and you force a trade, guess what you're going to do? You're going to take a loss. And then it takes 2 trades to get it back, and then and then you're at break even. So don't force trades. Wait on the sure things. Make sure you're winning at, your goal should be to win at an 80 to 90% clip. And if you can do that, you can make money. And we're only trying to get 4 ticks. I'm going to say this again. You're only trying to get 4 ticks. So the market only needs to move 5 ticks in your favor before it moves usually a bunch of ticks in the other direction. So keep that in mind. If you're trying to enter, let's just say you're trying to enter right here, and this bar is, this bar is 20 ticks. And so if you enter here and your stop is way down here, this thing only has to go 4 ticks this way before it goes all the way down here 20 something ticks lower. So if you're reading the chart right, the odds are in your favor. But if you put your stop anywhere in there before that low, there's a good chance they can see, look, these traders can see where the stops are. And if they see your stop sitting in there, they're going to try to get it. They're going to force prices back down there and get that stop and then let it go, and then it's going to rocket right where you thought it was going to go. That's why we put our stops where we do, because these are areas they cannot breach. There's too much buying coming in down here. Twice it came down here and it couldn't go any lower. So that's where we want to be. And the reason is because our stop is protected down there. It's not protected in the middle anywhere. They're going to get it. So where you put, I'm going to say this again, where you put your safety stop is 100 times more important than how big it is. Now, obviously, I'm not talking about 40 and 50 and 35 point, tick safety bars, safety stops. Still, your safety stop's better off there, but I'm not saying you want to risk that. But if you're going to trade in this market, you're going to risk some. There's a 20-point one. There's a 25. I'm not saying you take that trade, but you might. Here's one. That's a 12-point. This one was 17. The volatility's high, so you're going to have to take some risk. But look, it doesn't. It probably once it broke higher, it didn't back up more than a few ticks, but it backed up before it actually triggered. But even then, it didn't get any. It couldn't get anywhere near down here. There is a reason we put our stop where we put it. If you put it anywhere else, thinking that you're being a better trader by not taking as big a stop and keeping some little risk reward value in line, I'm just going to tell you, you're going to lose money. People argue with me on this, and finally I convinced them to take it, and the next thing you know, they said, man, you're right. All of a sudden I'm winning at a high clip now. I could never get a winner. And I ask them, the first thing I ask them is, show me one of your trades. And sure enough, they're putting their safety stop 8 ticks back because they think that's a good idea. And they get stopped out every time. They can't get one winner because they get stopped out every time. And you're going to get stopped out 9 out of 10 times if you keep your stop 8 ticks back if it's not below the swing low or above the swing high. And I didn't mean to get off on this tangent, but I'm just telling, I hear this argument over and over and over. That rule is written for losing traders and gamblers. We're not losing traders. We're not gamblers. We're taking a high probability, low risk entry, and we're only trying to get 4 ticks. So just, if you don't believe me, just try it. Sim trade it and try it. Don't believe me, prove it. Prove it out on the simulator. That's what it's for. But anyway, I just get, when I hear that, every time I hear that, I just cringe. And I try to convince people, and people just don't want to listen because they hear it everywhere they go. But think about it. What do you hear? 90% of traders are losers. 90% of them. And that's a pretty accurate assessment. And why is that? Because 90% of them are doing the wrong thing. So don't listen to these people in these forums that tell you to go for extra ticks or put your stop less down. Follow the rules. Get on the simulator. Follow the rules and see if it doesn't work. If you can read the chart properly. And if you have a bunch of losers, you're not reading the chart properly. Simple as that. I guarantee you, if you can read this chart and you're entering at the right places and you're putting your stop where it goes and you're trying to get your 4 ticks first, you're going to have a very high win percentage and you're going to make money. But you have to do all those things. You have to do them consistently every day, and you have to do them, be very disciplined about it. You can't fudge the rules. So anyway, that's enough. I'm going to get off my soapbox. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.